Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive stock analysis of NVIDIA Corporation, ticker symbol NVDA. If you're an investor looking to understand the ins and outs of this tech giant, especially in the context of AI and semiconductors, you're in the right place. We're covering everything from financials to valuation, recent performance, and even an intrinsic value analysis to see if this stock is worth your investment. So, grab a coffee, hit that like button, and let's get started. All right, let's set the stage. NVIDIA has been an absolute powerhouse in the tech world, and 2025 has been another blockbuster year for them. With the AI boom still in full swing, NVIDIA's chips are at the heart of everything from data centers to gaming and even autonomous vehicles. But with great growth comes great scrutiny. Questions about valuation, competition, and sustainability are popping up. In this video, we'll break it all down to help you decide if NVIDIA is a buy, hold, or sell for your portfolio. Stick with me as we unpack the numbers, the trends, and the future outlook for this semiconductor titan. Let's start with a quick refresher on who NVIDIA is. Founded in 1993 and headquartered in Santa Clara, California, NVIDIA Corporation is a global leader in graphics, computing, and networking solutions. While many of us first knew them for their gaming GPUs under the GeForce brand, they've evolved into so much more. Today, NVIDIA is the backbone of artificial intelligence infrastructure with their data center solutions, and they're also making waves in automotive tech with AI-driven autonomous systems. Led by CEO Jensen Huang, the company employs around 36,000 people and operates across key markets like the US, Taiwan, and China. Their mission? To pioneer accelerated computing and solve some of the world's toughest challenges. Pretty ambitious, right? Now, let's see how that translates to their financial performance. Moving on to revenue analysis, NVIDIA's top-line growth has been nothing short of spectacular. For fiscal year 2025, they reported a staggering $130.5 billion in revenue, more than double the $60.9 billion from 2024. That's a growth rate that most companies can only dream of. Breaking it down by segment, the data center category is the absolute star, contributing $115.2 billion, about 88% of total revenue. This is where NVIDIA's AI and machine learning chips, like the H100, are powering hyperscale cloud providers and enterprises. Gaming, their historical bread and butter, brought in $11.35 billion, while professional visualization and automotive segments added $1.88 billion and $1.69 billion, respectively. Geographically, the United States led with $61.26 billion, followed by Singapore at $23.68 billion and Taiwan at $20.57 billion. China, despite geopolitical tensions, still contributed a hefty $17.1 billion. What stands out here is how reliant NVIDIA has become on data center revenue. AI is clearly their golden goose, but it also raises questions about diversification. What happens if the AI hype cools off? We'll circle back to that later. Let's talk earnings. NVIDIA's most recent earnings for Q3 2026, reported on November 19, 2025, were jaw-dropping. They posted $57 billion in revenue for the quarter, crushing expectations and showing year-over-year growth that's honestly hard to fathom. Net income margins remain robust, and their EPS continues to reflect strong profitability. Key takeaways: the data center segment is still driving insane growth, fueled by demand for AI infrastructure. Management also highlighted strong adoption of their Blackwell architecture, which is set to be a game-changer for next-gen computing. However, there were whispers of supply chain constraints and rising costs, which could be a speed bump if not managed well. Overall, these earnings paint a picture of a company firing on all cylinders, but with some cautionary notes on the horizon. Diving deeper into the Q3 2026 earnings call transcript, there's a lot to unpack from management's commentary. CEO Jensen Huang was, as always, optimistic about NVIDIA's role in the AI revolution, stating that the demand for their GPUs is unprecedented as companies race to build AI infrastructure. He also teased upcoming innovations in the Blackwell platform, which could further solidify their market dominance. On the flip side, the CFO acknowledged some headwinds, including geopolitical risks in key markets like China and potential supply chain bottlenecks for critical components. They're also keeping an eye on spiraling costs as R&D spending ramps up to stay ahead of competitors. The tone was confident but pragmatic. NVIDIA knows they're in a strong position, but they're not blind to the challenges. As investors, this balance of optimism and caution is something to keep in mind. Now, let's get into the nitty-gritty of NVIDIA's financial statements. Looking at their income statement for FY 2025, gross profit hit $97.86 billion on that $130.5 billion revenue, translating to a gross margin of about 70%, incredibly high for a hardware-focused company. Net income soared to $72.88 billion, up from $29.76 billion in 2024, with an EPS of $2.97. That's a profitability story most companies would kill for. On the balance sheet, total assets grew to $111.6 billion, with cash and equivalents at $8.59 billion. Total liabilities stand at $32.27 billion, giving them a low debt-to-equity ratio of 0.088, very manageable. Their current ratio of 4.47 and quick ratio of 3.71 signal strong liquidity, meaning they can cover short-term obligations without breaking a sweat. Free cash flow for 2025 was a massive $60.85 billion, up from $27.2 billion the prior year, showing they're generating cash hand over fist. Return on equity at 103.8% and return on invested capital, ROIC, at 69% are off the charts, reflecting incredible efficiency in using shareholder money. Financially, NVIDIA is a fortress, but high growth often comes with high expectations. Can they sustain this pace? Let's tackle valuation. At a current stock price of $188.22, NVIDIA's market cap sits at a whopping $4.58 trillion. Their trailing PE ratio for FY 2025 is around 46.72, which is steep but not outrageous given their growth. The forward PE for 2026, based on analyst estimates, is around 39.94, suggesting the market expects continued earnings expansion, but at a slightly slower clip. Price-to-sales ratio is 24.79, again high, but reflective of their premium positioning in AI and tech. Compared to the semiconductor industry average PE of 293.15, NVIDIA actually looks reasonably valued within its peer group. However, with a beta of 2.28, this stock is volatile. Expect some wild swings if market sentiment shifts. Looking at enterprise value of $4.64 trillion and a free cash flow yield of 1.67%, there's an argument that NVIDIA is priced for perfection. Any stumble could lead to a pullback, but their fundamentals justify a premium for now. The question is, how much growth is already baked into this price? All right, let's break down NVIDIA through a SWOT analysis: strengths, weaknesses, opportunities, and threats. Starting with strengths, NVIDIA's record revenue growth and dominance in AI infrastructure are undeniable. Their data center segment is a cash cow, and their innovation pipeline, think Blackwell and beyond, keeps them ahead of the curve. Weaknesses: heavy reliance on data center revenue could be a risk if AI demand softens. Supply chain issues and geopolitical tensions, especially with China, are also red flags. On the opportunities side, the AI market is still expanding, and NVIDIA's early mover advantage positions them to capture more share. Their push into automotive and edge computing could open new revenue streams. Threats include intensifying competition from AMD and Intel, who are ramping up their AI offerings, and potential regulatory scrutiny over market dominance. Macroeconomic slowdowns could also hit discretionary spending on gaming hardware. Overall, NVIDIA's strengths outweigh the risks for now, but diversification and geopolitical strategy will be key to watch. Let's take a look at NVIDIA's recent performance on the charts. Over the past year, NVDA stock has gained 34.84%, a solid return that outpaces many peers in the tech sector. Zooming out, the 5-year performance is absolutely mind-blowing at 1,322.58. If you invested in NVIDIA back in 2020, you're sitting on a gold mine. However, shorter-term moves show some choppiness, down 1.8% in the last week, and a slight 0.4% dip over the past 3 months. The stock saw a strong 21.66% gain in the last 6 months, reflecting early 2025 momentum, but recent sideways trading suggests investor caution around valuation and growth sustainability. Compared to the semiconductor industry's 31.48% one-year return, NVIDIA is still a leader, though the tech sector as a whole, up 15.05% over 1 year, shows broader challenges. For short-term traders, watch key support levels around 180. If it holds, we could see a bounce. If it breaks, 170 might be the next stop. Long-term, the trend remains bullish, but volatility is part of the package with a beta this high. Now, let's get into intrinsic value analysis to see what NVIDIA is really worth. I've run a discounted cash flow DCF model based on their free cash flow growth, projected earnings, and a conservative discount rate of 10%. I've assumed a 5-year revenue growth rate of 20% annually, tapering down to a terminal growth rate of 3%, reflecting a maturing AI market. Starting with their 2025 free cash flow of $60.85 billion, I've factored in continued R&D investment and potential margin compression as competition heats up. I've also considered their strong balance sheet and low debt levels, which reduce risk. Let's crunch the numbers and see where we land. After running the DCF, I've arrived at an intrinsic value of approximately $210 per share for NVIDIA. Compared to the current price of $188.22, this suggests the stock is slightly undervalued by about 11%. This gives a margin of safety for long-term investors, assuming growth projections hold. However, my model is sensitive to growth assumptions. If AI demand slows faster than expected, or if costs balloon, that intrinsic value could drop to $180 or lower. On the flip side, if NVIDIA exceeds growth expectations with new products or markets, $250 isn't out of reach. For now, the numbers suggest NVIDIA is fairly priced with some upside potential, but it's not a screaming bargain.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.